Last episode, I spoke about why so many investors are selling up and leaving Perth. The money has to go somewhere. So where am I seeing some of the biggest investors in Australia buy in 2025? In this episode, I'm going to open up the top 3 locations that I'm seeing investors buying, my opinion in each of these markets, and finally, how this mass movement of wealth is finding its way into the crypto bull market. My name's Jeremy Iannuzzelli, and this is a podcast where I share with you all that you need to know about building true wealth. This is what school should have taught you, and let's talk about where I'm seeing investors buy in 2025.
Everything school should have taught you in one place. With a property portfolio of over 17 million and an accountancy firm of over 16,000 clients, as well as being an accountant to some of the wealthiest people in Australia, Jeremy Iannuzzelli will be sharing his lessons on everything school should have taught you so you can build the life you want.
Now, at the moment, there's been a flurry. And if you've watched my last episode, you'll see where I discussed why people are leaving Perth. But the money has to go somewhere, as I mentioned earlier. And where I'm starting to see this money is 3 specific locations. Now, what's driving these particular markets has been compression over the last probably 5 or 10 years. A lot of property professionals that are starting to move their clients into these warm or hotspots, as many people do call them. And when you start to see that level of activity from an investor perspective, it starts to bring in, as I said in a past episode, the herd mentality. Now, let's start with one of the first areas that I'm seeing a lot of property investors starting to buy in 2025 and the back end of 2024. Now, a lot of people have known about it probably for the last 12 months, but the far north Queensland region of places like Gladstone, Rockhampton, Cairns, they've all started to be purchased quite heavily. This is now the later part of the property investors that are moving into these markets. Now, I did see a number of buyers agents early on. We're talking probably about 2 years ago buy there in very patchy ways. Now, not necessarily were they focusing or concentrating specifically in that market. It's where something came up and it was good value, they were buying, but predominantly a lot of people were focusing still in the Perth market at that particular stage. But these areas now of far north Queensland are all started to be purchased by your mums and dads at the barbecue. And typically these are the later people that come into the property cycle. First, it's more your institutionalized investors or investors that are working with property professionals. And then you start to see the mums and dads who got the commentary from their best friends at the barbecue. So we are still seeing a bit of activity in that far north Queensland region. Although what I am hearing and what I am hearing from clients and buyers agents is prices have started to move quite quickly. And in fact, they're starting to be very careful of where they're buying and what price they're buying at. There is starting to be a disconnect between the vendor and obviously the purchaser, and that's where you start to see a slowing market. Not yet, but in the months or maybe early years to come. So far north Queensland is definitely still quite a hot market. Lots of people buying there, but finding those really good value properties are starting to become almost a needle in a haystack. That will deter people from buying there in the future. So be wary of it, but at the same time, there's still probably a lot of good deals to come. I would urge you though, if you are looking to purchase there, again, this is my opinion based upon my research, is that I have seen this market again over the last 15 years, very regional in nature. So it does have shorter, sharper property cycles of growth, followed by periods of stagnation or decline. Very dependent on price point. I've seen a lot of these prices hit these peaks that we're seeing today 10 years ago. It was followed by lower or crushing rental amounts per week on an income basis. And I saw vacancy rates started to balloon out. So this too could be very much an area like Perth where it could be transactional, where if you've got in and you've made double your money in a short period of time, it could be a great opportunity for you to look at other markets and push your money into other markets to continue that level of income and growth. Again, it's only from my personal opinion and my own research and data. Openly, I don't hold properties in far north Queensland, so I'm not invested into the area myself, but seen it over many years. That's what I've been able to see from clients who have purchased there in the past. A second area that I'm really starting to see, and this is an early adopter phase, I would say quite early on in the property cycle. Again, I haven't invested in there personally myself, and I haven't done too much research into this particular market, but I am starting to see a number of clients sign contracts for properties in the Northern Territory, more closely around the Darwin capital city. What I am seeing there is prices are sitting in between the 4s and 6s, and the yields are over 5.5%, 6% in most circumstances. circumstances. Again, that market's been very compressed for a number of years, and the rental market's been fairly compressed as well, although most recently a lot of announcements and energy and gas fields and other things that have come with it, starting to see the Northern Territory pop a little bit. Although I don't think it's anywhere near its full maturity, it potentially might have a number of years to go, although I'm starting to see a lot of clients buy there quite early. I myself, Northern Territory, very skeptical of it. It's a much smaller state, as we all know. A couple of the key points there that people love hearing is it's got no land tax because it's a territory-based, call it state, but it's a territory within inside the greater Australia country. Itself, from an industry perspective, tourism is one of the major parts of its industry, and also an exporter of raw materials or raw minerals such as gas in this particular instance. So there's a lot of work there for the time being, although we don't know how long this work will go for. You also must know, and you probably would have seen in a number of media articles and documentaries about the area of Perth, it has seen its fair run of crime over the last couple of years, and I do believe that's getting addressed by the state government. I know there was a call for a lot of federal assistance about a year ago to really curb a lot of the youth crime in the area. So it's a couple of things to consider. I am starting to see that area grow. I'm starting to see a lot more people purchase there, and starting to see prices on a contract basis from a client's perspective increase little bit by little bit. I myself, as Jeremy, a lot of questions have been asked of me, would I invest in the Northern Territory? The answer probably at present would be no. I'm more for a lot more of the blue chip areas. Again, it's just in relation to the income that I earn, not to say Northern Territory won't grow. But for me, I like to be more hands-on with my property investments now. And that means buying in areas where I can accessibly get to them with ease, without too much hassle. So typically that results predominantly with properties being on the east coast of Australia. So in short, Northern Territory, more specifically the surrounding suburbs of Darwin, is where a predominant amount of investors are buying now. Prices, I believe, are fairly cheap comparative to the median house price around the country, and yields are probably the strongest that I've seen over the last 12 months, with a lot of rising prices in many states. We haven't seen rents really creep up as much over the last 6 months, although Darwin and those surrounding suburbs are starting to see a bit of a tick up in the rental, which means probably better returns for many clients as people really try to seek a bit more balance in their portfolio with these higher for longer interest rates, much higher than many people anticipated. The third area, which we're all starting to see, and it's at the tip of everybody's tongue, and there's a million reasons as to why you should go there. There's a million reasons as why it's going to grow substantially in value, is Victoria, and more specifically the more centre regions of Victoria, the surrounding suburbs of Melbourne. We'll call it a radius of 30 kilometres. Starting to see a lot more people talk about it. Not a huge amount of people pull the trigger on the area, but it is creeping into conversations more often over the last, say, 3 to 4 months than it has been over the last 5 years. Now, typically speaking, a lot of the commentary around why Victoria, more specifically Melbourne, has got a lot of good legs for growth has been, well, it's been a Labor-run government for many, many years, if not decades. There's been 35 to 40 new introduced taxes in that state, predominantly around property as well. And there's talk about potentially a Liberal government maybe upstaging the long-standing Labor government that's been there for many years. And typically with Liberal governments, especially in power among states, they like a little bit more free-flowing capitalist society, and they do recognise that property is one of those things that if you've got a healthy property market and a buoyant property market, people feel a lot more happier. People feel a lot more confident. There's money that they're making traditionally on a balance sheet, or if they're selling on a P&L basis. And with more money floating around the state, brings more confidence, brings more strength to the economy. And we all know Victoria itself as a state has had a battering over the last 4 years. You've had pretty much every state in the country, and territory for that instance, go through a significant amount of growth, while Victoria has probably bubbled along at about 1 to 1.5% per year, with some regions in Victoria actually going backwards over the last 4 years. What I am seeing traditionally from the buyers that are buying there at the moment, clients-wise, is I'm actually seeing that middle market come down. So what was a top-end market of $1.5–2 million, those particular properties are starting to come back down to a middle market of $1 million. So where a property was selling a very nice owner-occupied area for, say, 1.5 or 1.8 mil, we are starting to see prices of 1 million to say 1.2. Talking to a couple close buyers agents who are locals in the Melbourne market have actually said that some of these real premium properties have come off by more than $1 million. Now, just to put into concept, I don't think I've seen $1 million decrease in the Sydney market throughout my whole duration as a property investor. Now, I may have not been in those markets to see it, but from what I've looked at over my years of investing, I don't think I've seen that level of decrease, especially from a large major capital city like Melbourne. So a lot of clients are starting to buy there. Specifically, some of the areas I'm seeing that clients are buying, they're buying in that Geelong region, which is, yes, considered a regional centre of Victoria itself, but I would call it a very large regional centre, about 75 kilometres south of Melbourne CBD. By memory, I believe it's Victoria's second largest city. A lot of clients are focusing on those radiuses of about 30 kilometres north, west and east of Melbourne CBD. Predominantly, I'm seeing a lot more people buying those more owner-occupied areas of northern Melbourne, and that's around places like Layla, Thomastown, Craigieburn. That's where I'm seeing a bit more of the contracts being signed. And then, yes, you've got your areas around the Frankston and that peninsula south of the Melbourne CBD. So it seems to be that a lot of people are focusing back on the areas of 8-9 years ago in Victoria, you know, your Meltons, your Frankstons, your Geelongs, which are more focused around property investors. But there's some really good parts north of Melbourne as well, where I'm starting to see a lot of clients buy. I haven't seen prices increase there yet. I haven't seen booming movements from $550,000 to $700,000. If anything, I think the prices have been more stagnant. But what I am seeing from clients is there's a little bit more movement in terms of the number of people buying there. And from the chats I'm having with them, and again, some friends in the industry, they're starting to say more and more people are turning up to open homes. And as we all know, if there's more people, more demand, we'll start to see a supply movement, which will then increase prices. I don't think Victoria's out of the woods yet. I think there is a little bit more turmoil there, but I do feel, in my personal opinion, maybe prices have hit the bottom. And now we're starting to see an uptake in the property, which will then reduce the inventory that's currently sitting on the market. So it's some really interesting times there from those three different markets. You've got far north Queensland, where there still seems to be some buyer activity, although a lot more people have the commentary around that prices are getting too expensive there. And when they start to compare something in far north Queensland selling at the same price as, say, something 20 kilometres away from Melbourne CBD, you've got to start to ask yourself the question, what's the better value? Definitely movement in Northern Territory, although myself, I haven't done a lot of research. I haven't invested in the Northern Territory before myself, but there is definitely an elevated amount of property transactions there. Put it in perspective, I don't think I've seen a client buy in the Northern Territory or Darwin for probably the last 8 years, and I've probably seen around about 30 or 40 people transact there in the last 3-4 months. So that to me is a significant increase, especially in my client base. And Melbourne, tip of everybody's tongue, spoken about at the barbecue. I've got clients reciting research to me left, right and centre as to why they should be buying in Melbourne. These are the reasons why they're buying. This is their strategy, their business plan behind it, not focusing so much on cash flow, focusing on growth, looking to buy properties where they can subdivide and maybe sell or build at the back. So there's a lot of things going for it. Has been a depressed market for the last 4 years. Once those buyers agents really aggressively start to buy there, we'll see a very different market. And I believe people are becoming more accustomed, and this is important, more accustomed to the negative gearing attributes when you're buying in Victoria, because traditionally speaking, from a yield perspective, Victoria's probably had one of the worst yields across the whole Australian demographic of buying properties. So that's important to understand. The yields are very low and people are starting to become accustomed to it. They're not fearful like they once were, because pretty much in most locations that you're buying in at the moment, you're pretty much buying properties that are negatively geared, even with an 80% leverage. Add equity that you may have used to pay for the deposit and borrowed the funds, well then that's only going to contribute even further. So we've just gone through those three locations where, again, from my personal opinion and just from my data capturing across my client base and speaking to a lot of people in the industry, they're the areas that we're starting to see a bit more movement and a lot of buyer uptake. Now, I've left this one till the very end. And this is now talking to you guys about the crypto space. This is one of the financial areas where I'm starting to see a significant uptake from a lot of clients who are liquidating properties or liquidating other investments and moving a lot of money into potentially this crypto bull market that we're seeing. Now, it's not the first time I've seen it. I probably haven't seen it at this level of velocity and ferociousness, but I am seeing clients liquidate large portions of their portfolio, whether it's shares or properties. I've got a number of clients who are liquidating a number of properties to move a substantial amount of money into the crypto market for that long-term gain, knowing full well that there's no income that is generated from it, but they're not too worried, because a lot of the wealth that they've gained, a lot of the profit they've made is now unencumbered because they've paid the capital gain tax on the profit of selling their asset. There's no loan against that asset anymore. So now they've got this free capital, this unencumbered capital, where they can put it into an investment and there's no cost towards it. Yes, potentially opportunity cost if it doesn't grow, but from a costing cash flow perspective, it's not really hitting their back pocket. They may have paid down their home loan to a sustainable amount of balance where they're comfortable, but I'm seeing a significant amount of money move from fiat, whether it's Australian dollars or overseas dollars, from Australian rural residential property, from Australian shares and managed funds into the crypto market. Now, the banks would be hating this because we all know the banks need cash. They need capital to put on their balance sheet to make sure that there's no future bank run. If it's all sitting in unregulated exchanges or those cold wallets or hard storages where, they can't touch it or it can't go into an institution for argument's sake, the bank's missing out on a lot of capital they could be using to make more money. But for the time being, I'm seeing people divest fully from their portfolio and move money into the cryptocurrency platform, buying things like Bitcoin. And the conversations I'm having with clients are around how they can get more money into it. Jeremy, is there a way that we can leverage into cryptocurrency by using equity from maybe our own home? So it's not just using cash, although many people are, it's how can they bring funding, how can they bring borrowing into the cryptocurrency exchange, because they're believing that the price is far substantially lower today than what it can be, say, in the next 5 years. So with a bull run, like what we've seen in the crypto market over the last 3 to 4 months, it does drag and suck in a lot of capital towards it, hence being a bull run, gathers momentum. On the other side, we might see things come down, and that's when we'll see a movement of capital maybe out of the cryptocurrency and into hard assets again. So 4 key areas of where I'm seeing people, again, put their money. They're putting their money, as I mentioned to you before, in the far north Queensland region, into Darwin, Northern Territory, and into the surrounding suburbs of the Melbourne CBD, that 30-kilometre radius, with the exception of Geelong being 70 kilometres south. So that's what I'm seeing a lot of wealthy people start to do with their money. Whether they're right or wrong, only time will tell. I'm invested into some of those areas in some of those markets, and some I'm not. Some I've done my own research and some I haven't. So I encourage you that if you're going to be buying in these warm or hot spots where a lot of property professionals and investors alike are putting their money, I urge you to make sure you do your due diligence, have a business plan and understand what your entry and exit strategy is into that market. If you're going to look at cryptocurrency as a place to generate wealth, understand it does come with risks and higher than average volatility, as you've seen probably over the last 10 years of the crypto space. Although if you think it's going to go to the moon, please put some money in for me and drag me along the way. I'm Jeremy Iannuzzelli, and that's what school should have taught you. If you're really loving the content that I'm creating on iTunes, Spotify, YouTube, please hit that subscribe button and be notified of when my next episode comes out. I look forward to seeing you on my next episode. Thank you again.